Well, welcome back to Module 4, how much cover and the application process you need. It's Justin Pagotto here, and my job is to help you protect you and your family. Let's have a look at how much cover you need and the actual application process of applying for cover. The first thing to do is, once you realise that you do need to protect your family, is to work out the sum insured. We take an innovative approach of asking our clients 30 or 40 questions to work out what would you like to happen if certain things happen. Then we come up with defined recommendations and solutions that actually meet those needs. There are a number of simple things that I can share with you in this video, but when we actually go through the cover, it'll be a bit more in depth. But in terms of how much life insurance to cover, some things that you could consider are what's called the DIME principle. Getting rid of all your non-mortgage debt, providing an income stream for your dependents, so you need to look at how much income you want to give your family if you're not around anymore, and how many years that's applicable for. Paying out your mortgage so that your dependents own their own home. There's an old saying in the insurance industry that the debt should die with the person who created it. And then lastly, how much money do you want to put away for it? Okay, in terms of how much trauma cover to get, and thanks to CommInsure for this slide, so I'll give them credit for it. Basically, income protection covers you for up to 75%, some covers have 80%, but then you basically lost that 25% of your income, which is about equal to the average mortgage repayment. Why not actually get your income protection in place, which covers you for the regular living expenses, consider having trauma for the amount of your mortgage, so that if something happens, your mortgage is paid out in full and your remaining income, which is your income protection, will actually pay for your living expenses. But as I said before, everyone's case is different. These are just concepts to think about. Once you've worked out how much cover you actually need, the next step is actually go through the application process. You need to write down your medical history, what existing insurance you've got, get your tax returns in place so you can prove your income and get that endorsed income protection policy. You might need to get medicals, blood tests and so forth, but we'll let you know about that. And then how you're going to pay for it, whether it's via your credit card, bank account, or a combination of your super. We've got an easy to use pro forma from one of the insurers that makes it easy for you to collect that information. Once you've actually got that information, it's time to apply. And there's 5 things that can happen. Being underwritten is very important, as we've discussed in the previous modules, because it gives you certainty and clarity that you've disclosed absolutely everything, the insurance company knows and has assessed you properly, and you've got clarity in the type of cover you've got. First thing that could happen is you're accepted at standard rates, no questions asked. This is called a clean skin in the industry, and to be honest, it doesn't happen that often. Most people need to be in step 2, providing more information about their financial history or medical history before an assessment can be made. 90% of people get cover at standard rates. The third thing that could happen is an exclusion, and the best way to describe that is like hail damage on a car. If you've got hail damage on your car, you go to your insurer to get comprehensive car insurance. That's called a pre-existing condition, and of course they're not going to cover you. It's the same thing in life, TPD, trauma and income protection. If you've got, say, a really bad knee from a skiing accident, depending on what occupation you have, that may not be covered. But just like the car, the rest of your body is actually covered, so you've got cover for a large number of things going wrong for sickness, accident or death. Fourth thing that can happen is you could be what's called have a loading applied or a medical extra. And this means you pay more because the standard rates for people in good health and people who have got some health issues basically are higher risk. Remember, insurance is all about risk. How much you pay depends on the risk that you pose to the insurance company. And so the people who do have those health issues, they can have that medical extra applied to their cover. But don't forget, if you've got some serious health issues, it's even more important to get your cover in place because you're actually at a lot higher chance of claiming. Last thing is deferred or decline, and in that case, basically the insurer can say, no, we're not going to give you cover. And in over 10 years of providing this type of event, it really doesn't happen that often. But even if it does, there's other covers like accident-only policies which can cover you anyway. So don't worry too much about that. As I said before, 90% of people get cover at standard rates. As we said in this video, we're giving you general advice only, so you really need to have a chat to us so we can go through those questions with you, work out how much cover you need, and to put in place a solution for you. Thank you for listening.